guys, welcome back. Drip Coach here, where we don't trust, we verify, and operate with integrity and transparency. Let me move my microphone. It appears falling off here. So we got this clip from Raoul Pal where he was talking about the October monthly recap. And this is the video I was talking about in other ones about the ISM data and how that is the driving factor for us to see kind of these blow off tops. Not the driving factor because that's liquidity, but the business cycle ties into that. I've pulled this up before on the channel, but just to give you guys a reminder, the ISM is the manufacturing index, also known as the Purchasing Managers Index or PMI, and it's considered to be a key indicator of the state of the US economy. So a PMI reading above 50 indicates growth in manufacturing sector, while a reading below 50 signifies contraction compared to a previous month. And you can come out to tradingeconomics.com and see the United States ISM chart here. And you can see the big injection or running with the bull market was post-COVID. So this was COVID here coming in 2020 and everything is shut down. And then all of a sudden we have a huge boom in the ISM. It goes all the way up to 67 at the peak, 64.7, sorry, in the March. And then it's been dropping off ever since. So for the last, what is this? October 2022, we have had a sub 50 ISM. You had this one peak here in December of January 2025, but that's kind of an outlier. It's like literally 1 month out of the last 3 years, and 3 years and 1 month now. So clearly it's not been positive for the business market.
The business cycle. The business cycle is the daddy that drives earnings in the economy and is the kind of arbiter of economic growth. The business cycle has been lackluster. As you know, the ISM survey has been slow. The ISM survey is actually driven by liquidity, which leads by 6 months. Liquidity has been relatively choppy on a year-on-year basis, on a global basis, but ahead, we should start to see ISM grow. Note the little hook down in liquidity that's currently happening. Oh, that seems to correspond with other things that are going on right now, but that's a forward-looking thing. So liquidity has been pulling back somewhat, but we expect the business cycle to start to grow. Obviously, we've got this government shutdown. I'll come on to that in a sec. That may still kind of cause another month or two of weaker ISM because of the government sector. Maybe not. We'll have to wait and see. I'm indifferent to it because we know where it's going. And behind this indicator is probably 50 to show a lead on this. But what's important here is the GMI dominoes. And this is the liquidity cascade. Out in the future, in this lovely, attractive purple color, is the GMI Financial Conditions Index. That lives 9 months ahead of anything of the ISM. That is what leads it all. That's driven by interest rates. It's driven by commodity prices. It's driven by the dollar. And that has started weakening after a period of consolidation. So weakening here is this going up because it's inverted. So what we've got is easier financial conditions are going on. And we've seen that as rates have started to fall. So that is going on. That leads total liquidity by about 6 months. Now, there's a bit of a shifting lead lag here, but either way, we're expecting global liquidity to now follow GMI financial conditions. Does global liquidity have another down month? Probably, possibly, maybe 2 months. No, I think it's a month. And then what happens is it hooks up with financial conditions as we go into the end of the year.
And that's what we're seeing playing out right now. So he made this video October 22nd. So it's literally a month old at this stage. Almost a month. Today is November 18th. But he's showing, again, this is why I like listening to him. I know some people don't like Raoul Pal for some odd reason, but he shows the data. And you can go out and collect all this and run the data yourself. But I am indeed actually just trusting him and his team because they're one of the ones that have put this out there and then others have co-signed on it. So it's kind of like democratized data being validated by the masses. But with these different lead lag indicators, yeah, you can make the charts kind of say one thing over another. So you got to take that into consideration. But as he's showing all this, he's giving you the reason for why they shifted these kinds of things. So the TLDR is that there is about a 6 to 9 month lead on where things are going. So like he said, for right now, we could see maybe another month, 2 at the most, but he believes 1 month of more negativity. And we're literally seeing that right now in November play out in real time. So literally a month ago, he called this, and then now we're seeing it happen right now. So let's finish this up.
October would print as a weaker month, obviously because of what is happening with the US government shutdown, where there's less liquidity being pumped in the system. But I'll come to that. And then the ISM follows suit. The ISM is where, when we get above 50 and start expanding, is where alt season is. It's where the Russell 2000 breaks out. It's where the small caps start going. It's where the riskier credit starts moving. That's the real game in town. You need a booming economy and lots of liquidity to drive the money shot. The way you can make money by just throwing a dart on your screen and whatever it hits will go up. That's to come. Those are the banana zone points when things really accelerate. It's all coming. It's a matter of patience. Don't forget, the ISM has 1 data point a month. And you think you're trading it with your tick charts on your screen. You are sadly deluded. That's not how this works. So hence why you just kind of do nothing and let this play out. We've got the game here. The game here is that. The game here allows the asset prices to move because total liquidity is the thing that drives Bitcoin and the NASDAQ, which are the things we really care about. Where's the world? How are you reading?
So that to me is just the eye opener. That's all you really need. It's like, yeah, everyone who's trying to make these assumptions and trading charts, and it's like, yeah, when you have a macro variable like the ISM and that you can only get that data point once a month, it's like, yeah, you really need to zoom out and create some additional indicators to create a framework. You can't just take that one data point and then go, okay, that's it, because it's 1 month's worth of data. It takes 30 days to collect all that. So how are you going to make any kind of short-term analysis based off of that? Like, it's going to always be, yeah, either, depending on what you're tying with, leading or lagging. It cannot be real time because of how long it takes to collect it, right? And since it's such a macro variable, when you tie that with liquidity, it's like, yeah, zoom out, create a longer term thesis. Stop trying to day trade Bitcoin and causing all this volatility. Like that, again, I keep stating this, is that the reason that I'm still bullish is because there's so many people that just don't understand what this is. And they're trying to take their logic of, trading stocks, equities, and bring it into Bitcoin. It's like, you don't trade it. It's something you're meant to buy and hold. The same way people, hold Picasso paintings and art and real estate. They don't sit there and trade it every day. You don't go out and try to find someone else to buy your Manhattan real estate or your beachfront property. It's like, no, you buy it, you hold it for 20, 30 fucking years. But people just see Bitcoin and crypto as this get rich quick scheme. So they're causing the volatility. They're adding the 100, 1000x leverage. You don't see 1000x leverage on a fucking Picasso painting on real estate. So that just lets you know that you're still early, because people are just gambling with this asset. They're not looking at it as a long-term store of wealth or value. It's just something to gamble, get in and get out. And then sadly, well, actually, it's good for people like us staying humble, stacking sats, but sadly, they're taking their winnings and putting it into something worse. So it's like you gamble on it and then you sell it, to get what, fiat? Like, yeah, you guys just don't get it. So the opportunity is still here. Regardless of what is going to happen in the short term, there's still a huge, huge opportunity. All right, smash that HBO special, help brother out, like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.